Welcome back to Wealth Conversation hosted here on Wealth Money TV. This is the second session on family and finances. I'm still in the show. We are still here taking a cup of tea with Kenon to take you again through the second show. Stay tuned. So you've talked about transparency,
Yes.
and I wanted to add in the aspect of accountability.
Yeah.
How important is it in managing the finances at a family level?
It is very important. Relationships are built on trust. Now, when you bring finances on top of a relationship, trust levels double. So then why transparency is important is you build each other's trust. You can imagine a couple who they are doing life together, then maybe some years later I realize you have another account which I didn't know about. I should be very happy. That's additional money to the family. But not so. I might say, hang on, you've been lying to me all this time. That is a positive thing that's already affecting trust. Okay? So that underscores how important transparency is. It is a core. It doesn't matter how much you're making, how much you're bringing, is how do I feel that we're in this together? I have people, one of the things we recommend is each family taking a personal allowance, each member of the family taking a personal allowance. There are people who would like to put their money in one pool and they manage it from there. There are people who want to divide roles. You take care of rent, I take care of school fees. Whichever angle, it's important to have a personal allowance. What does it do? It is a no questions asked amount. Okay? And then so because human beings, everybody has their internal things. So maybe there's something I just want to do just because I'm a human being. I'm not like holding away, hiding from you. But when you have a no questions asked amount, it could be 1,000, 10,000, it's for you to decide. It reduces the need of being dishonest or lacking transparency, because there are things that you want to do, and we will not even ask you. Obviously, we are taking these are positive things. Okay? Because sometimes the human tendency is to hive off something because there's an agenda you have that's personal, nothing wrong with it. But if it comes out in the open later on, it might crush all this trust thing you're trying to build. It might crash the accountability. Now accountability comes in. It means if the amount is 100,000, my personal allowance is 10. So I have to be accountable on the 90. So accountability comes, say for example, you're meant to settle school fees. It's important that you follow through with that commitment, because that's how to be accountable, that you can be counted upon to actually do what you're supposed to do. Yeah.
Good. No, I like, the way you're talking, things are just coming. The issue of commitment and discipline in the family. How do we attain it? Discipline and commitment on financial management.
So discipline and commitment, I'll go back to my good old budget, because budget creates visibility, okay? It creates discipline. As I said, money has its own ways, but if you have a budget, you're clearly supposed to go this way. That helps with that. Commitment then is finding ways to do that in time. In our personal financial management, there is something we talk about, spend it all in 2 days. What we tell families, even individuals, once you have decided how your money is going to go, and you're clear this is a blueprint, and you're living within your means, don't hesitate. Do exactly that. In fact, for people in employment, we tell them, get one afternoon, and all you're doing that afternoon is spending. And it's not reckless because you've already planned.
Yes.
So I know I need to do this, I need to do this. If you can put standing orders, put them. If you can put payroll deductions, put them. But in terms of commitment, money is useful when it has done what it was meant to do. Not when it's in the pocket. When it's in the pocket, I can tell you it will find other things. So to your question about commitment is do exactly what you have planned to do. There's a small element where there could be unforeseen circumstances or emergencies. that budget for them, hive out something, but in my view, it's not very material. Okay, and it doesn't come every day. So it's about spending it all in 2 days. Know where the money is supposed to go, let it go there. You'll thank yourself later because money is more useful when it does what it was supposed to do.
Wow. That's Professor Kenan Mbaye. Money is useful if it does what it was meant to do. Now, Kenan, I know in your journey with couples and the financial trainings that you've had, you've encountered crises that were as a result of poor financial decisions.
Yes.
And it's because people invested their money in an area that is more risky.
Okay.
As families are doing their risk assessment, apart from age, what else do they want to consider?
So all investments have a certain spectrum. What I mean is, and I've seen it with most of my clients, we are mostly socialized to ask the question, what am I going to get from this investment? Or how much am I going to get? If it is quail eggs, what are they getting? If it's bitcoins, what are they return? If it is land, wherever it is, we are wired to do that. There's one particular topic that we do. It's called risk and return. It's one of the most important topics that adds value to couples because we tell them every investment has an element of risk. But sometimes risk is taken as a negative thing. We all feel we don't want to venture in there, but that's incorrect. Risk is understanding what can go wrong and reducing the impact and the likelihood of that happening. So anytime we talk about returns, we always say have a dual vision. One looks at the return because it's important, but the other one looks at risk. So that's why I'm saying all investments, from whatever angle, they always have an element of return and the risk that goes with it. Our advice has always been create an investment plan. If you have 100,000 to spend, what percentage of that goes to the high risk, high return? What percentages go to the low risk, low returns, and what percentage stays in the middle? Ideally speaking, we say high risk, high return, don't put more than 10% of your money there. So let's say you have 100,000 shillings. That's your investment pool. So what we say is identify what percentage of that goes to the high risk, high return investment, and they are there. And by the way, we tell clients, don't shy away from them. Only don't put your lunch money there. Don't put your rent money there. Have just a small portion, approximately 10%. How much of that goes into the low risk, low return? Again, we say probably 30%, because again, you actually want to grow. This is an investment agenda. This is not savings. Savings will build you the capital. Investments will bring you the wealth. So because you're talking investments, focus on the middle part. Okay, there's an element of probably shares, real estate, sometimes properties will fall there. And that portion is the middle, where there's middle return and middle risk. High risk, you're talking about cryptocurrency and forex trading and starting off a business. Low risk, you're talking about cash in the bank. You're talking about treasury bonds and treasury bills. You're probably talking about unit trust as well. So that's a spectrum. So a family that is planning their lives and want to look at risk is you put an investment plan that takes care of risk and you determine how much goes where. It's a very back of the envelope conversation, but before I leave this point, every investment advice is very personalized. So I want to urge our viewers, as much as we are putting this across, please don't take this and use it without further deeper consultation. These are just general views, but it's important for people to know it's very personalized. It depends on very many other things over and above what you're saying. Here we're just giving an overview of things. Yeah.
In the leadership and, in the family structures, I've had stories with families who've said, my wife is a good accountant, my husband is a good investment advisor. So I will make sure cash is well managed. He will make sure we get the investment opportunities. How wise is that?
I think that's very wise. And what I see there is each of the people have identified their strengths and they're leveraging, they're using that to benefit the family. Common example, if you're going to judge a monkey's ability by swimming competition, you've lost it. So for me, I think that's very wise because each of the people have gotten what they're very good at. They are complementing each other. The wife is saying, I'm good at accounting. The husband is good at investing. Please give the other a blessing. Let them be the best they can be. In that setting, it's synergy. 1 + 1 becomes 3. And that for me is a very wise thing to do. And I'm happy you've picked those 2 examples. It could be so many other examples. A marketer sitting with an admin person, and it could be anything. The only challenge you need to see there is potential conflict. Okay, because being an accountant, I've worked with marketers for a long time. I'm imagining if it's a family setting where it's someone who's an accounting mind and someone who's a marketing mind, there's potential conflict.
Yes.
Because one person sees only one direction. The marketer sees there's these 5 opportunities. What's the issue? The accountant is saying the last 2 you didn't explain what happened. Then the marketer says, but we implemented one that made us get a bonus. It goes round and round. It's wise, but also watch for potential conflicts and make the best of them. Okay, make the best of them. The fact that you're good at something, I should actually embrace that instead of even trying to be that. Yeah.
As a father, I go back to the conversation around children.
Yeah.
The balance between investing for your children and investing in your children. How do you strike it?
So the thing about investing for your children and in your children, I read something this week. They were saying that if you're blessed with 2 children, create a third. Because the risk sometimes that parents run is they put their everything on their children. We love them, we cherish them. These are God's gifts. But it does not mean we don't get anything for ourselves as parents. That's why they say, if you pay school fees of 20,000 for child 1, fees for 20,000 for child 2, please put aside 20,000 for an imaginary child 3. That is your safety net. That's important because in the future, you don't want to bother these children with coming now to help you and you expect so much from them. The other concept around that is giving them values. Okay? When you're investing in your children, it is more than the money. What are you instilling in them? What kind of people are you bringing up? What is their belief system? What habits are you promoting in their lives? What are you modeling? Because most times it is what they see more than what you say. It is what they see. What are you modeling there? So in terms of investing for and in your children, put in values, put in the kind of people they're becoming. For the children, create a third. If you have 3 children, have a 4th. If you have 6 children, have a 7th. It creates a nice balance. Then also see that they're getting proper value. I have nothing against any education system, but I really question as a parent, what is it giving my children? If you do it that way, you're actually doing them a favor. You are actually investing in them. It's not just pushing through a certain agenda that does not develop their best. Yeah, could be they have the talents that needs to be tapped in a certain way. I've seen that in Africa, there is a lot of reliance and focus on grades. But I also think it's a stage we are in.
Yes.
If someone comes and tells you they don't want to go to school, they want to do art, and that's your child, in this part of the world, that may not be very wise. Because for them to succeed and make a living out of that art, their chances are slimmer. So you need to create that balance. Let them go through the academics because that's what we have in this part of the world. If it's in another part of the world, that maybe can be embraced better. So as you invest in them, see that they're getting value from the education they're getting.
You mentioned something about money being a motive, and I've heard many people say, various things that causes cracks in families, and they bring in the aspect of money. First of all, do you agree with that? And if that is the case, then what needs to be done?
I do agree with that. It is a critical thing that brings potential cracks in families. Yes, I totally agree it's a motive. I actually mentioned that a bit earlier. What should be done about it? Just create your goals. Have your personal allowance, because that removes the pressure. Because the thing why money brings conflicts is we disagree on how it can be used or it should be used. One person thinks one thing, the other person thinks the other thing. And sometimes the thing that you're thinking about, you're so fixated on it. You are so convinced this is the direction things should take. Couple client of mine walked in. One of the people in that relationship felt so strongly they need to invest in a certain business. And they're when I listen to them, they're kind of, they are so consumed, they are not able to see that actually there are risks in what they're saying. The other person in the couple says, there's no way you're going into that business. Again, when I listen to her, I realize they may not know, they might be missing an opportunity. So conflicts come in because people want things to go a certain way. They are so sold that into them. They are so convinced it's going to work. Another way is to get an independent person. Small amounts of money. Get to someone who can help you write an objective business plan. Okay, that removes the conflict and the emotion that goes with it, because someone's telling you, if you want to go into the food market in Kericho or Nairobi or Mombasa, whatever part it is that you want to do, this is how it looks. This is how the landscape looks like. It is more than what you feel or what you think. It is what is on the ground. So getting a third party objective opinion can help reduce these conflicts and the emotion that comes with it. Yeah. Again, there's that part, as I said, a personal allowance. Please use it as you find best, as you feel best. Yeah, because it gives you the space also to be a person, a human being.
The no question amount. I
Yes,
like that.
no
But
questions asked.
remember not to raise it too high, to have 50% as no question amount.
Absolutely. But yeah, you're right. You're
Yeah.
right.
So a good man leaves inheritance for their children. You agree with that, right?
I totally agree with that.
Talk about it.
So I'd look at inheritance from a number of perspectives. Maybe I'll just divide them into three. Values, opportunities, and money. Okay? My view is that we need to instill the right values in our children. This is the best inheritance you can give them. What kind of people are they becoming? All right? I would easily give that 50% of the inheritance I would leave my children. That you are seeing that they have a connection with their creator, they have respect for people, they have self-worth, they are balanced, socially adjusted. For me, that is very important in terms of leaving them an inheritance. Opportunities is empowerment. What are you instilling them in terms of a skill, in terms of knowledge, in terms of ability to make wealth? Okay. Then thirdly, now give them hard cash, because it's important to leave them then resources they can start with. I've personally seen how an inheritance can help you boost yourself. You can imagine you are trying to start off something and then you get 1,000,000 shillings from your father or from your mother. It is such a boost. So I'll put it that way. The values that you're giving them, empower them, and then give them hard cash in that order.
Wow. Wow. I think we're gonna come up with a whole book out of this discussion. I'm really liking it. But in the interest of time, maybe, I know you have friends who are married, they are couples, families, whether married or not. What are some of the mistakes that you have seen people make that you wouldn't want them to make?
Common mistakes.
Yes.
I think one is starting things too late. Notice I didn't mention age. What you could be at 30 and you're starting too late.
Yes.
But starting things too late is a common mistake. Sometimes you feel that you'll start later. You start all this business of planning finances later. That's a common mistake I've seen. Then people stand aside and say, I wish I started earlier. That's a common mistake I've seen. The other common mistake I've seen is lack of budgeting. Japhet, you'll be shocked about the number of people who have a basic idea where their money goes, but I've had a chance to tell them, let's actually sit down and let's look at it in detail. And then at the end of that conversation, someone stands back and they're shocked because they thought they have it all in the mind. They didn't realize that these small amounts are actually adding up to something. So lack of a budget or a plan, or why are we doing what you're doing? That's a second mistake I've seen. Of course, a third one goes to transparency. And there are people who say they've always had secret accounts that come up later, or they are sending money to their families. The other person doesn't know. Remember, there's nothing wrong with that. Interesting. There's nothing wrong with doing that. Just have a discussion. So that when those things come out later, they crush people. They crush your trust. They finish you. You're like, so what have you been doing all this time? How much more don't I know? All right. So those are maybe the three key mistakes I can pick out.
Wow. Thank you very much. So I want you to give our viewer your parting shot before we close the show.
Okay.
Your wisest of the one.
I'll try. So basically, money can be managed. Money is a resource. There's a formula to money, just like there's a formula to every art. It is not very difficult. So the thing is, it's good to understand it. And I say we are not asking you to be an expert in matters money or finances. We're just asking you to have the right nuggets. In fact, I use the analogy of a door. A door is very big, but it's moved around by very small hinges. So it is those hinges that you're looking for, and I think we've covered them quite well in the show with Japhet here. So just expose yourself, be bold, use your talents, grow your income, build assets, eliminate liabilities, and watch your spending habits.
Wow. Thank you very much, Ken. We appreciate you for coming to the show, and we appreciate, on behalf of the viewer, we've really learned a lot, and we also appreciate you, our viewer, for joining in. Again, remember to take notes, share these with your friends as a video. Remember to drop a question at the comment section, like the video, and recommend it to many of your friends and families who you want to benefit from this. Until we see you in the next show, stay blessed.